Market Uptrend channel. If you are the foreign investor who is interested in Vietnamese stock market, this YouTube channel will provide the most objective information that
Headlines: SVB collapse make it impossible to say what stocks are worth as the bond market volatility explodes. The fallout from the closure of 3 U.S. banks in the span of 3 weeks is making it near impossible for analysts to determine a fair valuation for stocks, as volatility in the U.S. government bond market surged to its highest level in nearly 15 years. Market strategists say that is due to in part to increasing uncertainty around how the Federal Reserve will react going forward, as it attempts to balance the spread of risk to markets and the economy. If you can't price bond, you can't price stock. At the root of the problem is the ICE both AML move index, a gauge of implied volatility in the Treasury market. The index surged to 174 on Tuesday, its highest level. This essentially means traders of Treasury option and interest rate swap are bracing for the yield on the 2-year Treasury note to swing by 12 or 13 basis points on average every day over the coming month. When market conditions are more placid, the rate typically see much smaller moves of between 2 and 3 basis points a day, says Scott Leder, chief investment officer of Horizon Investment. Shifting bond yields have a major impact on equity valuations because of a concept in finance known as equity risk premium, that is, the rewards investors receive for buying riskier assets like stock instead of risk-free assets like Treasury bonds. Of course, the notion that Treasury bonds are considered risk-free doesn't mean they are insulated from losses, but they are seen as safer investment, in part because investors can typically recoup their money by holding a bond to maturity. Seeing the Fed's aggressive interest rate hike over the past year have enabled the crisis, by forcing banks to book a large market-to-market loss on their bond portfolios. Investor analysis now expect that the Fed will be more circumspect going forward from fear of sparking another crisis. Fed fund futures expect the Fed's fund rate target will end the year between 4.25% and 4.5% after peaking to between 4.75% and 5% in June. That would suggest that the market only sees one more 25 basis point hike before the Fed pauses. The result of this is that Fed might find itself paused in, no longer able to be as aggressive in fighting inflation as it would have liked to be. Central banks seek to reduce the bank loan to the shareholder. The State Bank of Vietnam is seeking to reduce amounts banks can lend to their shareholder as a part of effort to prevent manipulation and reduce cross-ownership. It wants to reduce the maximum loan bank can give customer to 10% of its capital from the current 15% and maximum loan to the customer and affiliate to 15% from the current 25%. Besides, it wants to limit an individual ownership in a bank to 3 or less, down from the current 5%, and an organization ownership to 10%, down from the current 15%. But the rule will not apply to banks that are under special control or to the government's ownership. The proposals are also meant to enable a more equitable distribution of a bank credit.
Thank you for your attention. Don't forget to follow and subscribe this channel to update the latest news with Miss Market Uptrend. If you have any question, feel free to connect to Kakaotalk with us. Thank you.